Good morning, this is Nicholas Furtak for Trader24.co.za. We're going to focus on gold charts today. An interesting move last week on the back of Bernanke speaking about possible QE3. We've also got Draghi, who came out yesterday. He's disappointed a little bit, but the gold price has reacted very positively this morning, Thursday morning. It's now over the 1700 mark, and we think it's a little bit, as you can see here on the chart, a little bit overbought on the RSI. So I think we could have a little bit of a pullback. Buying here probably in the long run won't even do much damage to your portfolio. The pullback won't be massive. We think eventually we're going to target 1800, but maybe guys who aren't in yet could wait a little bit to pick some up. The interesting thing is the gold shares, particularly the South African gold shares, which are also dual listed on the New York Stock Exchange, have not reacted to the news. We're going to take a look at some of those now, and maybe there's some trades still available. We're going to go with the biggest counter. I think it's the number 2 world producer of gold, Anglo Gold. The code is ANG in South Africa. In the United States, it trades under AU. Here we've got the chart. As you can see, the gold price has been trending up over recent weeks, yet we're sitting pretty close to 5-year lows on Anglo Gold. The company has very good mines. This is probably the best bet, probably in the ranks probably Parupasu with Barrick Gold. I'd say this morning it's already bolted through to about 275. Picking it up there wouldn't be overpaying for it, and the target would be those highs in the mid 290s for the short term, and eventually we think by the end of this quarter we'll be pretty close to that 320 Rand mark. Taking a look at Goldfields, which recently fell due to an unprotected strike. The strike is now over, and the shares obviously reacted to that, but the good bar was around the 102 mark. At 107 it is a little bit high. If we see a pullback towards 105, I'd be picking this share up for a run up to about 115, the previous highs. Also a company with very good mines, and I think by end of Q4 we're going to look to see this one back above 125, making new highs for the year. So this one's also quite a good bet. There's a dividend pay coming out this weekend, R1.30, and it's a reasonable dividend pay, around 4%, which is strange for a gold stock. The last one, which is probably the weakest of the mines, trades under ticker HAR for Harmony. It's the weakest of the mines, but it's also currently the cheapest of the lot, because the results weren't great a couple of weeks ago, and as you can see, the drop's been in the range of 15 to 20%, which is a little bit overdone. We believe anywhere around between 70 to 73 is a good buy. You can even pay 75 for this share. Trades as a ticker in the US, it's HMY, and we'll target it towards $9 and above. That's currently sitting at around 8.20 last night's close. I think this will easily get back to 80, and that's not going to even be in a number of weeks' time. It's a number of days, and return back to above 100 by the end of Q4. So we're looking with a lot of interest at our gold charts and our gold sector to be one of the leaders for the last quarter.